Hello, my name is Allison Schiavo from Eckerd Connects and America's Job Center. I'm here with Stacy Church from Polk Insurance. She's an insurance agent and HR person. And we're going to talk today about the Affordable Care Act. We know that during the pandemic, people have been losing their jobs and their employer-sponsored insurance. So they created a special open enrollment period for affordable care. So I thought we'd get Stacy, who's an expert and an insurance agent on Zoom with us so that we can kind of find out information about how to apply, who's eligible, and all of that. So Stacy, thanks for being with us.
You're welcome. My pleasure.
Can you tell us about what Affordable Care Act is?
The Affordable Care Act is basically essentially Obamacare, and it is for anyone that qualifies for health care that isn't offered health care through an employer. There are some income requirements that need to be met to be eligible for the Affordable Care Act, but yes, and about 85% of the people in SLO County meet the eligibility requirements.
Okay.
So probably more than that right now.
Mm-hmm, mm-hmm. So tell me a little bit about the tiers, the Affordable Care Act tiers.
Well, tier levels typically have to deal with prescriptions, not necessarily group plans. There are plans, we look at them like the medals in the Olympics. They go from bronze to platinum. So there are different plans that you can choose, and they come with different co-pays, with different deductibles, and different maximum out-of-pocket expenses. And the bronze plans start out where you're paying much less a month, but your deductible's higher. And as you climb the metal tier levels, you're paying more out of pocket for the plan and less out of pocket in terms of deductibles and copays.
Okay. So it sounds like depending on the tier, prescription coverage might be an option for people who sign up.
Prescriptions are included with all of the plans through Covered California. If you are on expensive prescription drugs at the time that, if you make me your contact and call me, I can go over what would be covered and what it might cost you out of pocket if you're on an expensive medication.
Okay. If someone recently lost their employer-sponsored medical benefits and they signed up for the Affordable Care Act, would they be able to keep their doctor?
You know, that is a good question, and many people are able to keep their doctors. The best thing to do is to call your doctor's office and say, you know, I'm losing my employer-sponsored coverage that I've always had since I've been seeing my primary care doctor, and I'm going to go to Covered California. Do you accept those plans? And depending on the answer, obviously, if it's a no, they may have to find someone else. Generally, there is about a 50-50 chance that they take it.
Okay. So the open enrollment period is happening now. Is there an end date?
There is an end date of June 1st.
Okay.
And it's actually a special enrollment period still for those people that have coverage. Employer-sponsored coverage. It's only if you're losing coverage do you have what's called a special enrollment, and then you can apply at any time during the year once you're losing coverage that you have no control of losing.
Okay.
So if you lose coverage because you're not working, you've been furloughed, your last day of coverage is April 30th, you're looking for coverage to start May 1st, now's the time to call to get on a Covered California plan.
Great. So you said about 85% of people will be eligible?
Will qualify,
Will
yes.
qualify. So how does someone go about finding out if they qualify?
They can call me at Polk Insurance. I can let them know, I'll just name off some numbers for you very quickly. But a family of four, if they're earning 100 and uh, a little, let me just get the numbers really quick for you. I'm sorry, I should have had those out. But 154,000 for a family of four, you still qualify for Covered California.
Okay.
If you're making 74,000 or less and you're a single person, you qualify for Covered California. Most people that want the cost share, meaning that they pay a smaller portion based off of their ability to pay, are going to be a lot less than that. But you'll still qualify up to that point.
Okay. So they can give you a call. Is there a way to apply online as well?
There is a way to apply online. They can Google Covered California.
Okay.
And get on the website. There are agents there that are working constantly. I understand the wait times right now are pretty heavy if you have issues going on. But the advantage of calling me is that I can help you through that. I've done hundreds of these applications. And you don't have to accept the offer. You can just think about the offers before you accept as well.
Great. And what do people need to have on hand when they apply?
Excellent question. We have to identify you. So we need your driver's license, or they will need the ability to upload their driver's license if they go on Covered California. You'll need your social security number. If you're applying for a household, you're going to need everyone's social security number and dates of birth. And basically that's your address and household income. So if you're married, it's both people and both people's income. If you're living with someone and you're under one roof but filed separately, that's a question that you might want to have answered before you start that application process. If you're living with a roommate, obviously you don't have to report that income of a roommate if you're filing single. But if your taxable income is together and you're living with a partner or you're married, they count all household income.
Well, that's great. I think that's all the questions that I can think of. Are there any questions that you get when people call you for the first time that you want to share information with the public?
Mainly people want to know if vision and dental are covered on there. They're not, but they can add them for a very reasonable amount based, again, off of their ability to pay. So someone that, is 35 years old and a plan is typically $500-600, they might only have to pay $75 to $125, and they might have the ability to add on a dental plan for another $30 a month. It's based off of your ability to pay, so it stays that way. It doesn't increase as long as your income stays the same. You are mandated to report income changes, and that's the thing that will be of a big surprise to you if you don't report those income changes. So, you may be off of work right now for a short time. Once you get back onto your normal work schedule or you're back into your daily life, you're going to want to report your income change so that it doesn't catch up with you at the end of the year tax-wise.
Well, thank you, Stacy. I appreciate your time and all your information. If people want to get a hold of you, are your services free?
Our services are for free.
Okay. What's a good number for them to reach you?
It's 805-544-6454.
Great. Thank you, Stacy.